Welcome to the Stock Market Palantir channel. Don't miss any new stock insights from us by subscribing to our channel and drop any comments below. Okay, let's get started.
Okay. Friday, January 30th, 2026, the closing price, $22.42. Now, that number, it represents a recovery of 1.59% from the intraday lows, but let's be honest. Looking at the closing price alone is, it's like looking at the surface of the ocean during a hurricane. It just hides the violence underneath.
The price action barely tells the story. I mean, the volume was absolute insanity. 40.8 million shares traded during that Thursday sell-off alone. For context, the average daily volume is what, roughly 25 million? We saw a spike of over 25% early in the week, followed immediately by a 12.4% crash. It was a bloodbath, followed by a bounce.
Precisely. It was a whipsaw week. And the ticker driving all this chaos is USARR, U.S. Rare Earth Inc. And the question on the table today is, well, it's massive. Is this company the new industrial sovereign of North America? Are we looking at the entity that effectively breaks China's chokehold by building a true mine-to-magnet supply chain?
Or, as the market seemed to fear on Thursday, is this just a pre-revenue project that is simply diluting its shareholders into oblivion? Because when you look past the press releases, the shareholder destruction to get to this point has been, well, historic. And frankly, that volatility is exactly what we need to investigate.
It has been painful, I admit, but look at the news cycle we just lived through. On January 26th, we got the announcement of a massive $1.6 billion funding commitment from the Department of Commerce under the CHIPS Act. Simultaneously, a $1.5 billion PIPE transaction, that's private investment in public equity, led by Inflection Point.
On paper, they are flush with cash. They secured the bag. But then, reality hit. The Reuters report on January 29th suggested the Trump administration is reconsidering price floors for critical minerals. That report effectively took the knees out from under the stock. It forced investors to ask, wait, does the government actually have our back? Or do they just give us a loan and, walk away?
I understand the volatility scares people, but let me frame my position clearly from the start. For the first time in the history of Western rare earth development, we have a company that has definitively crossed the valley of death. With the capital injection from the government and the PIPE, USA Rare Earth now has access to roughly $3.5 billion in liquidity. They are no longer a speculative junior miner shaking a tin cup for financing. They are a fully capitalized industrial project.
And here's my position. I don't buy that the valley of death is crossed just because the bank account is full. You have to look at the cost of that capital. The dilution here is staggering. Existing shareholders have seen their stake diluted by nearly 1,500% over the last year. You can have all the cash in the world, but if you had to print a mountain of paper to get it, the legacy shareholder is left with crumbs. Furthermore, they are pivoting their technology at the 11th hour, they are pre-revenue, technically unproven, and now potentially facing a price war without a shield.
A fair summary of the fears. But let's dismantle them one by one. You're looking at past dilution. I am looking at future strategic dominance. This is a mine-to-magnet strategy. That isn't just a buzzword. They control the Round Top deposit in Texas for the raw material. They've acquired LCM in the UK to solve the metal-making bottleneck, and they are commissioning the magnet plant in Stillwater, Oklahoma right now.
It sounds impressive when you list the assets, but assets don't equal cash flow.
It's not just impressive, it's necessary. And this is the key distinction listeners need to understand, the difference between light rare earths and heavy rare earths. Most people look at MP Materials, the big player in this space, and think USR is just chasing them. But MP Materials focuses on light rare earths, neodymium and praseodymium. USR focuses on heavy rare earths, dysprosium and terbium.
Which are the scarcer elements? Granted,
They are the vitamins of the magnet world. You simply cannot build a fighter jet, a guided missile, or a high-performance EV motor without them because they allow magnets to operate at high temperatures. If you put a standard magnet in a jet engine, it demagnetizes. You need dysprosium to keep it stable. China controls 99% of that heavy market. USR is the only viable Western answer to that monopoly.
I appreciate the chemistry lesson, but I want to talk about the valuation of that chemistry. You are valuing them on a scarcity premium for elements they aren't even mining yet. The market cap is fluctuating around $3 billion. Compare that to MP Materials at $11.2 billion or Linus at $10.6 billion.
Exactly. There is a huge gap.
Right, but MP Materials is operational. They are profitable. They have a mine that works and ships product every single day. USAR is valued at $3 billion based on a hole in the ground in Texas that won't produce commercially until what, late 2028? And that's if they're lucky.
But that is exactly where the arbitrage opportunity exists. You buy before the production starts.
You buy if the economics make sense. And this brings us back to the price floor controversy in the Reuters report. The entire bull case for USAR, and really for the whole sector, was predicated on the idea that the U.S. government would guarantee prices. They did it for MP Materials with a 10-year floor of $110 per kilogram for NdPr. If the administration says stand on your own 2 feet, USAR is in trouble. Because the ore at Round Top, it's low grade.
Low grade is a relative term when you have massive scale.
It's a geologic fact. Round Top is a rhyolite laccolith. For the listeners who aren't geologists, picture a massive mushroom of volcanic rock that pushed up the Earth. The rare earths are disseminated through this massive volume of rock, like salt mixed into dough. But the concentration is low. You have to move mountains of earth to get the same amount of material that a higher grade deposit yields. That is expensive. Without the government price floor, if China decides to flood the market and drop the price of dysprosium, USR's margins evaporate. They could be mining at a loss.
That analysis misses the vertical integration aspect. You are treating them like a commodity seller. I dig rock, I sell rock. That's not the business model.
They are selling magnets, sure, but the cost of the raw material matters.
It matters less when you own the whole chain. The acquisition of LCM, Less Common Metals, in the UK is the bridge. They bought the only commercial-scale producer of rare earth metals outside of China. They can now take oxides, turn them into metal, and then turn that metal into magnets at Stillwater. They are capturing the margin at every step of the chain. MP Materials is still largely selling concentrate and oxides. USAR is selling the finished component. That vertical integration protects them from commodity price swings more than you're giving them credit for.
It protects them only if the technical execution works. But before we get to the tech, and I do want to grill you on the tech, I want to talk about the investment reality for the listener. Let's break down the math.
Let's do it.
Okay, say a listener puts $5,000 into USAR at Friday's close of $22.42. They get about 223 shares. What does that actually look like in risk terms?
I think it looks like an incredible asymmetrical bet to the upside.
Or a quick way to lose $1,600. The bear case is immediate execution risk. We are waiting on the Stillwater plant to ramp up. If there are technical delays, which, let's be honest, happen in 90% of these complex industrial projects, the stock drifts back to its recent lows. Analysts have a downside target of $15. Your $5,000 investment becomes $3,345, just like that.
You're focused on the stumbling blocks.
I'm focused on the going concern warning from Q3 2025 that is still hanging over them. Yes, they got funding, but the burn rate is astronomical. And don't forget the government stake. The U.S. government now owns, or will own via warrants, an equity stake of roughly 8 to 16%.
Which provides a massive floor of security. The government is a partner.
Or it caps the upside. The U.S. government is not a profit-maximizing shareholder. They want security of supply. They don't care if the stock goes to 100. They just want the magnets for the missiles. If the company struggles, the government might force decisions that are good for national security, but terrible for shareholder equity. Ask anyone who held Fannie Mae how government partnership works out for the common stock.
That's a cynical view, though. I grant the historical precedent. But let's look at the mid to long-term ROI for that $5,000. By 2030, the company targets 10,000 metric tons of magnet capacity. If they hit that, and if they start mining at Round Top, they should trade at multiples similar to MP Materials' historic peaks.
If they hit capacity, if they mine.
Benchmark has a target of $45 per share. That implies your $5,000 becomes $10,035. You double your money in 4 to 5 years. And here is the kicker, the piece of data that I think overrides your cynicism: insider buying.
You mean Blitzer?
I mean, Chairman Michael Blitzer, he didn't just facilitate the pipe deal, he reached into his own pocket. On January 29th, amidst that massive sell-off we talked about, he bought 100,000 shares in the open market at an average of $21.44. That's $2.14 million of his own cash.
That is substantial.
When the chairman is buying millions worth of stock at $21, he is screaming that he believes the floor is in. He knows the intricacies of the financing better than anyone. He isn't betting $2 million to lose it.
I admit, the insider buying is the strongest counter-argument to my bearishness. Blitzer is smart, and that is a high-conviction trade. But let's talk about what he's actually betting on and the technical risks involved, because this is where I get really nervous and where I think the summary usually skips over the details.
You're referring to the extraction technology pivot?
I am. This is crucial. For years, USA Rare Earth marketed itself on Continuous Ion Exchange, or CIX. They told investors this was the magic bullet for the low-grade ore at Round Top. They said CIX was cleaner, cheaper, and more efficient than traditional methods. It was their competitive advantage.
And it's great technology.
But recently, in December 2025, they pivoted. They quietly announced they're switching to solvent extraction, or SX, for their feasibility studies.
Because SX is the industry standard. It's proven. It's what everyone uses. Why is adopting the industry standard a risk?
Because proven doesn't mean easy. Solvent extraction is chemically intensive. It involves mixing the dissolved ore with organic solvents, essentially oil and water separation on a massive toxic scale. It uses huge amounts of acid. And here's the specific problem with Round Top. It isn't just rare earths. That volcanic rock contains uranium and thorium.
Which are radioactive.
Exactly. When you use solvent extraction on radioactive dirt, you generate radioactive waste and radioactive water that is very difficult to manage. You are in Texas, sure, and Texas is mining friendly, but the EPA is still the EPA. This pivot to SX suggests to me that their proprietary CIX technology didn't work at scale. So now they have to permit a dirty, acid-heavy process while handling uranium.
And you think that delays the timeline?
I think the risk that the 2028 mining start date gets pushed to 2030 or 2032 due to permitting delays is massive. You can't just dump radioactive acid waste in a pond anymore. The environmental impact statement alone could take years.
I see the risk there, and I agree that the pivot to SX raised eyebrows. But I think you're underestimating the leadership's ability to navigate the bureaucracy. This is where the CEO, Barbara Humpton, comes in.
She's impressive. I won't deny that.
She isn't a miner. She's ex-Siemens, ex-Lockheed Martin. She managed a $23 billion revenue portfolio at Siemens. She knows how to navigate the federal government better than perhaps any industrial CEO in the country.
She is definitely a government relations play.
Exactly. The reason they got the $1.6 billion from the Department of Commerce when so many others failed is because Humpton knows how the Pentagon and the White House think. Investors view her as a safe pair of hands. She sits on the board of the Federal Reserve Bank of Richmond. She has the credibility to get those permits pushed through because this project is being framed as a matter of national security.
She has credibility in the boardroom, absolutely. But she's a mathematician by training, not a geologist. In interviews, I've noticed she consistently sidesteps granular technical questions about the ore grade or the SX process. She pivots immediately to strategy, to geopolitics, to reshoring. That's fine for a politician, but for a mining CEO, it worries me.
Why? Strategy is the CEO's job.
Because the risk is in the dirt, not in the boardroom. If the chemistry doesn't work, or if the EPA blocks the SX process because of the thorium, no amount of lobbying saves the share price. You can't lobby physics. You can't lobby chemistry.
I think the market disagrees with you regarding her effectiveness. Look at the capital she raised, $3.1 billion in a matter of months. That is validation.
It's validation of her fundraising ability, not the geology. But let's look at who else is holding this bag. Institutional ownership is shockingly low for a company of this size.
It's sitting between 23 and 28%.
Exactly. Compare that to MP Materials or other established industrial players where institutions own 60, 70, 80%. USAOR is still heavily owned by retail investors and the private equity groups that took it public. That makes it volatile. Retail investors panic. Institutions hold. That explains the 25% swings we saw last week.
Or conversely, that low ownership represents the single biggest catalyst for the stock price moving forward: institutional discovery.
How so?
Look at the trends. Vanguard increased their holdings by 533% in the last reported quarter. Renaissance Technologies, the smartest quant fund on the planet, has entered the stock. These are the smart money scouts.
They are dipping a toe in.
For now. But here is the mechanism. As the Stillwater plant comes online and they start posting actual revenue, USAR will become eligible for major indexes. When a company gets added to the Russell 2000 or the S&P Midcap 400, the passive funds, the BlackRocks, the State Streets, are forced to buy. They don't have a choice. Their algorithms have to match the index. That buying pressure, combined with the relatively low float, will drive the price up. It's a mechanical squeeze waiting to happen.
That's a fair argument for a squeeze, I'll give you that. But it relies entirely on them hitting those milestones without stumbling. And frankly, with a pre-revenue company pivoting its technology at the last minute, stumbling is the norm, not the exception.
Let's look deeper at the financials for a moment. You mentioned the going concern warning, but we need to look at the long-term valuation modeling. Management is guiding for $1.2 billion in EBITDA by 2030.
That is a very aggressive projection.
It is, but let's apply a standard multiple. In specialty chemicals, a 10 times EBITDA multiple is standard. That gets you to a $12 billion enterprise value.
That's a lot of ifs. If they mine, if they refine, if they sell.
Even with the massive dilution, and I'm using a fully diluted share count of around 272 million shares here to be conservative, that implies a stock price of $44.11. That matches the benchmark target almost exactly. So the path from $22 to $44 isn't built on fantasy. It's built on standard industry multiples applied to their stated goals.
But that path is paved with 1,400% dilution. You cannot ignore that shareholders have been washed out to get here. And who is to say they won't dilute again? Building a mine is inflationary. Costs always go up. If that $3.5 billion liquidity isn't enough, they will come back to the market.
They have the government loan.
And since the government has warrants, the government stake gets protected while the retail investor gets diluted again. The government ensures the entity survives. They don't promise the stock price survives. That is a non-zero risk.
It's a risk, but a remote one, given the bipartisan support for reshoring. Let's circle back to the product itself to understand why the government is so involved. The demand for dysprosium and terbium is inelastic in the defense sector.
Meaning they will pay whatever it costs?
Exactly. You simply cannot build a Virginia-class submarine or an F-35 without these specific heavy rare earths. Currently, that supply chain runs through China. If tensions over Taiwan escalate, China cuts off the supply. We saw them threaten this recently. USAR is the insurance policy. That scarcity premium is why I believe the price floor debate is overblown. The market, specifically the defense contractors, will pay a premium for non-Chinese heavies, regardless of what the Trump administration officially decrees.
That's a compelling argument, but if you consider the timeline, geopolitics moves fast. Mining moves slow. USAR is targeting late 2028 for mining. That is nearly 3 years away. A lot can happen in 3 years. China could flood the market to bankrupt Western startups before they even get started. They've done it before. Without that explicit government price floor, USAR is walking into a price war with one hand tied behind its back.
And that is why the magnet plant is so genius. We keep coming back to this. They aren't just selling the raw rock into a price war. They are selling the magnet.
The Made in America premium?
The certification premium. Auto manufacturers want long-term contracts for magnets. They want traceability. GM and Ford want to be able to say their EV is made in America from the dirt to the driveway to qualify for tax credits. USR provides that certification. That creates a moat that raw commodity pricing can't easily breach.
I'll grant you the magnet plant is the jewel here. If they can get Line 1A operational in Q1 2026, that's literally weeks away, without hiccups, that changes the narrative significantly. It proves they can execute. But until I see magnets rolling off that line, it's just a press release.
We are weeks away from that proof, and the market is starting to price it in. That's why the stock held a $22 level despite the Reuters panic.
It held because Michael Blitzer spent $2 million defending it.
Which validates the thesis. If the smartest guy in the room, the guy who structured the deal, is buying, we should pay attention. He is putting his money where his mouth is.
Or he's defending his own reputation and trying to stop a run on the bank. Look, we're going in circles on the intent, but the numbers are the numbers.
So let's wrap this up. How do we synthesize this for the listener?
Here is my summary. This is a high-risk bet on execution. The company has diluted shareholders massively over 1,400%. They are pivoting their core extraction technology from CIX to SX at a very late stage, introducing massive environmental and permitting risks with the EPA. The lack of a guaranteed price floor from the Trump administration exposes them to Chinese predatory pricing. If you put $5,000 in today, you're effectively flipping a coin on whether they can actually build a complex mine in Texas by 2028 without going bust or diluting you again. It's a binary outcome.
I see it differently. The valley of death is over. USA Rare Earths has secured the bag, $3.5 billion in liquidity. They are the best capitalized play on Western supply chain independence. They hold the heavy rare earths that the world is desperate for. The insider buying at $21 confirms a strong floor. The potential to double your investment by 2030 is real because the Western world simply needs non-Chinese dysprosium. This isn't just a stock, it's a geopolitical necessity.
We can agree on one thing. This stock will remain extremely volatile. It is going to trade on federal policy news just as much as it trades on mining outputs.
Absolutely. Every headline from Washington or Beijing will move this ticker. It is not for the faint of heart.
If you are going to play this game, you need to read the filings. Specifically, look at the inflection point filings and understand the warrant structure. That's where the real details are hiding.
Good advice. Do your own diligence. We'll be watching the tape.
If you like this video and want to watch more content like this, then hit the subscribe button. It's totally free. Thanks for watching and see you in the next video.